Hello, everyone, and welcome back to episode 25 of the Lunchtime Hour series, where we are now 4 minutes late. But then again, who cares when the markets are green?
This time it wasn't my fault, people. It wasn't my fault this time. It was Neil.
Technically speaking, both of us. But at least it gives people time to come and tune in. So we're doing this on purpose.
And I'm happy, Neil. Today is not a therapy session. I think we've had 2 back-to-back therapy sessions here on the live stream. But like you said, obviously in the past few months, it still sucks. But it's good to see 2 strong days in the overall market.
Yeah, we were preparing for another therapy session, but luckily we don't have to. Luckily, we don't have to turn this into a therapy session. So we're happy that the markets are, let me show it, currently mostly green. So this is what we like to see. Coming into Monday, some people were saying, oh, this is going to be Black Monday, whatever. Well, clearly the opposite happened. So we cannot complain.
Yeah, I mean, two strong days. I mean, obviously, it doesn't mean that the bottom is completely here. I still expect heavy volatility. But Neil, it kind of just showcases why maybe we both can agree why kind of that long-term mentality exists. Imagine being that person that sold yesterday at like 9:30 when the market opened up. You were down. I think Nvidia is the only one I can kind of remember was like at $84. And then by the end of the day, or 87, somewhere in the mid 80s. And then by the end of the day, it was like $97. And last time I checked was over $100. But it's like selling and then missing out like 24 hours can be the reason you beat or miss or kind of underperform the market. So I think it again, I'm not saying this is the bottom, but it's just a perfect example of showcasing how trying to time it can go pretty bad pretty quickly.
Yeah, I mean, even Palantir, I think when the market opened yesterday was at $67, $68, and now we're at 81. So, I mean, it's a huge jump. And to be honest, I mean, you've probably seen the comment before, right? Buying AMD is like trying to catch a falling knife. I think we've discussed this in the past, where buying great companies at good prices for us long-term investors is not really trying to catch a falling knife. It's just buying good companies at good prices. If you're trying to trade it, something else. If you're trying to buy it and then sell for an extra $2 or so, then sure, maybe try and time the market and try not to get cut. But for us, I think we have enjoyed these prices. Of course, we would enjoy it if it goes to 200 or more, but I don't think that we're complaining when we can buy AMD under $100.
Yeah, agree, Neil. A lot of these companies, right? I mean, there were so many great companies that I also price bias is also a thing in both the up and downturn, right? I think it's like a few 3 days ago for companies like Nvidia, everybody was price biased that, hey, look, it used to be 150. Now is the time to kind of get in. And then after you kind of get these 2 days of rally, you kind of go, oh, look, the bottom was at $87. I can probably get there. I can get there again. And what if we don't? So I just want to say price bias is something that can hurt both in both sides. So just be careful. Just maybe try to look at valuations. And again, I just mentioned video because it's the first one I can think of in forms of numbers that I recall. But just with any company, price bias it could be a crutch, and you gotta like understand that long-term thesis and understand why you're very bullish in the companies you're investing in.
Yeah, and remember, I mean, I'm already seeing some comments here. Oh, we're going back down. We're going back to the red, or the market is only up 1%. I mean, the market can be up only 1%, and yet you can still have this, right? You can still have a Meta that's up 1.3, and Nvidia that's up close to 3%, Broadcom up 5%, Palantir up 3.6%. So just because the market is up 1% or barely up does not mean that plenty of other stocks that probably are oversold or are already beaten down quite a lot cannot go up much more than the market. That's basically their beta here.
So Neil, what are your thoughts on the market here? If you had like a crystal ball, what would you kind of say is going to happen based on your thoughts? And I know you kind of look a lot at like historical stuff and like to compare it with historical events. So any thoughts here?
I mean, right now, since the Thursday live stream, I mean, the odds were in our favor, and yet somehow we managed to be on the opposite side of things. Although, I mean, could have been much worse. Okay, now Apple has turned red, but could have been much worse on Monday, right? Monday we could have finished down another 3% or so overall. We didn't. We finished basically flat to down-ish 0.5% or something like that. Today we're green, but I don't think we're out of the woods yet. I think we're maybe trying to see if we can find enough buyers at these prices. Of course, tomorrow is the deadline, and then I think the focus is fully on China, right? Between the US and China, I think all the rest are now in probably negotiation or going to be negotiations in the next couple of days, next couple of weeks. Yesterday, Scott Bessent basically said, look, we're going to be in conversations. Things are going to be, well, negotiated in April, in May, maybe even in June. So I don't think we're out of the woods yet. But the biggest uncertainty is, of course, that big, let's call it a trade war with China. I think with the rest, with Japan, with Vietnam, with Europe, probably Europe as well, I think we're going to see some negotiation headlines or some real negotiations, maybe press conferences in the next couple of days for maybe Korea, South Korea, and Japan, and then the rest maybe in the next couple of weeks or so. But it remains to be seen what happens with China. Now, of course, some people say, oh, China is going to win. Well, China's economy is already struggling, right? It has been struggling since the pandemic and has, well, failed to recover, to be honest. They're actually experiencing, well, maybe it was a month or so ago, deflation. So I don't think they are here in a place of strength, but maybe they don't really care, because let's be honest, it's the CCP. They don't really care that much. So we'll see. Still a very important part of the whole worldwide supply chain. So it's important to see what's going to happen with that. Of course, can also impact some semiconductor players, some other tech players there as well. So not out of the woods yet, but of course I rather see green than deep red.
So, Neil, we have this question here from Cheyenne. If Trump keeps tariffs like he's saying, we're going to hit stagflation era for 100%, for sure, 100%. Many businesses will be destroyed. The threat is real. Why are you guys so optimistic for this is bad? So, Neil, I mean, I want to say with these tariffs, I think originally the market priced kind of everything bad for everybody. But I think these tariffs are very variable through each companies because every company has kind of a whole supply chain. Um, right. Every company has different supply chain styles, um, and a few things that kind of we can see is someone was talking about kind of like Nvidia, and there have been reports that Nvidia about 60% or 70% of their AI servers are actually made in Mexico and may actually be exempt from some of the tariffs, and 30% get made from Taiwan. So there could be some bullish there. In the AI market, Neil, I've heard from Microsoft CEO that they want to continue to invest in AI solutions, even with these uncertainties. And what I'm hearing from everybody, at least on the top level approach dealing with the AI market, is that they want to continue in AI investments because this is a technology that they can't leave behind, and that in whatever happens with the supply chain, they will move around it. But overall, I'm still pretty much bullish for the AI space. And for each company, like I mentioned, tariffs are different. There is kind of like an exception. If more than 20% of your content is made in the United States, you can kind of write that off a little bit in the forms of the tariffs. And we are seeing that a lot of these semiconductor players might start moving to some, because TSMC doesn't have a lot, but some of that manufacturing of the chips being made here in the United States. We have kind of like Micron Technology and some of the other semiconductor players in the memory space also have some form of manufacturing here in the United States. And those semiconductor products tend to be very high in the cost of goods. So it can easily that a lot of these products, a lot of these servers can say, hey, look, we hit about that 20% being made in the United States. And that can help a lot with some of the tariffs costs. So for each company is a little bit different. Maybe for consumer products, I do see like Apple, for example, taking a bigger hit. They have a huge supply chain in China. AMD and Intel, right? AMD specifically at the moment has taken quite a hit because most of the laptops that get made in the overseas, right? So I think it's a difference between AI servers and laptops. Laptops do have a good presence in China, and for a lot of these tariffs, is more kind of that final transformation, where kind of that's where the tariff starts to take place, and that's where you write it off in these paper. That's where you write it in these paperwork is that final transformation, and for laptops, it's usually that finished good. So the consumer space might be seeing a little bit of weakness, but I think for the AI space, I'm still pretty bullish in it. Broadcom was a perfect example as well. Yesterday announced that $10 billion announcement right now, and I think it did it more just to showcase that they're still bullish in their overall business, and to showcase that they are believing these stock prices are kind of like cheap. So it's more of like a boost to investors.
Yeah, and I mean, to be honest, I mean, maybe we're going into stagflation, maybe not. I mean, saying 100% for sure, nobody knows, right? Unless you have a crystal ball, I'd like to buy it, but nobody knows. Maybe we are already in a recession, a roaring recession, a real recession. Everybody's speculating, right? We are here speculating as well. We're trying to do our best looking at the data that's available to us. The Fed is actually doing the same thing, and they have more data than us, and they were still wrong a couple of years ago, right? They said inflation was transitory. No, it was not. No, it was not. They were very late to the party. And to be honest, I still think they are late to the party today, but we'll see. We'll see what happened. Plus, everything, I mean, for the next 12 months, things can be rough, right? And that's the thing. It's just for the next 12 months. If you're here in the market for the next 10 years, 15 years, 20 years, what is 12 months? Of course, in the short term, it can be bad. Some companies, some businesses will definitely get hurt. But long term, I honestly don't see myself looking back 10 years from now and say, oh, the start of 2025, that was a rough one, right? I'm not even thinking about, oh, the end of 2018, that was a rough one either. No. And I'm pretty sure that some people don't even know what I'm talking about when saying at the end of 2018. So it's a rough couple of days for sure. but I think we've seen worse, and I think that headlines are always way more dramatic than what they should be. I mean, Jim Cramer saying that Monday was going to be a Black Monday, that was pretty nuts and irresponsible in my opinion. But then again, it fits his show, like being super dramatic, whether it's on the upside or the downside. And maybe because he said it's going to be Black Monday, maybe that's why it didn't happen. But yeah, we'll see. But right now, apparently, the White House has said that 104% tariffs on China went into effect today. So yeah, maybe that's why the market went down in the last couple of minutes.
Yeah, interesting. And to be honest, like I'm not nowhere near a tariff expert, but I have been kind of increasing my knowledge. And this is, I think AI has helped me so much. Perplexity has helped me understand more kind of like the semiconductor place in it. And it has made me really understand that there's so much uncertainty with each company, and for each company, some form of analyst needs to go through like the whole financial aspect behind it and their supply chain. So it's going to be pretty hard. I think this is where opportunities come, right, Neil? When like the market prices everything as complete Armageddon, but then there are those companies that, because you understand so well, you understand that maybe the supply chain might not be hit as much as some of the other players, and that the market's expectations were way below what they can actually perform. And I think that's where you kind of see those great returns.
Yeah, and I mean, I'll give an example here. When it comes to analysts, right? Analyst expectations. A lot of analysts just follow price. Price drives sentiment. And I'll give the perfect example because we are Tesla shareholders here. Dan Ives, right? Dan Ives a month ago had a Tesla price target of $550, and I believe it was on their best ideas or something like that list just a month ago. And a month ago, all of the talks about brand damage and Elon Musk and Doge were already known, right? Everybody was already talking about that.
Hold on,
But
Neil. Sorry, we just got some reports. People are saying, I'm not sure how true this is because I know some people like to play around, but people are saying that CNBC is saying, and we got two people saying the same, that tariffs on China are not in effect and they will go into effect at midnight. Oh, okay.
Okay, for a second there, I thought we were we were done with
Yesterday
that.
again. Yesterday, that thing was wild. It was like,
And
pause.
that thing was crazy. That was nuts. I mean, that was a $1 trillion move on the fake post. But anyways, with the analysts, I mean, Dan Ives a month ago, $550, Tesla best idea of the year, blah blah blah. A month later, the stock is obviously down a lot, and suddenly it's a $315 price target. So quite a big change in price target. And then when you see the reason why he downgraded, the price went down drastically, it's because of the same reasons people were saying, well, Tesla stock is going to go down or is down because of, well, Doge, brand damage, etc., etc. But he didn't change his mind a month ago when the stock was a bit higher. But now that the stock is down, that's when the points actually make sense to him. Which to me, I mean, the little credibility that he still had in my eyes went away just like that. I tweeted out earlier today. I mean, in 2021, the guy had a price target for Rivian at $130. Rivian at $130. You want to know why? Because Rivian was trading at $100. So, yeah, now his price target is at 20 or 15 or whatever.
Yeah, and I mean, that's why, Neil, I think we've discussed it. We don't really like to follow analysts, and I think it's also, you can kind of see it. I think people always just love to get kind of confirmation bias, and I think it's also here for our YouTube channels, right? I mean, like I really do enjoy Nvidia. So when Nvidia is doing good, you love to go see a video about Nvidia doing great. But then if Nvidia continues to does bad, and I'm still bullish in the company, you start to see kind of like the opposite effect on YouTube channels. So I think it's the same with the analysts. All these people like to follow. I'm not saying any of these analysts are really good or really bad. I don't follow any, but it's like, some of them start to get very popular when the overall market really enjoys the companies, or the retail investors enjoy what they're investing in at the moment. But But to me, analysts are great at providing kind of maybe inside data, not inside data, but data that maybe I can't find through just the typical earnings call. And I think we mentioned it, right? We do enjoy reading some of these reports because they provide a little bit more information that maybe we couldn't get because they pay a few hundred thousands of dollars on certain market software solutions.
Yeah, I mean today's time, today's age, we have also the luxury that a lot of these leaders or leaders in the industry actually go on podcasts and talk. So that's also great information that we get for free that previously did not exist, right? Previously, you did not have a Steve Ballmer or whatnot go on a podcast or for an hour and tell his story, tell about what Microsoft have been working on or various other companies. So I think that's also a big plus and something retail can definitely use a bit more and a bit less of the CNBC headlines or whatnot.
Definitely, Neil. We got some questions here. I want to see if we can get some. So here we have one from Alexander. If you had to rank the following three stocks for the next few years, which one would you choose? For Neil, out of this list, what would you be like your number 1, 2, and 3?
Interesting. Following three stocks for the next, which one would you choose? Risk reward wise, it's probably ranked correctly already, risk reward wise, with the price action and the valuation. But you could also put AMD as number 1 and Micron as number 2, and Nebius, since it's still the smallest one, still on track to become profitable, but still not. So I guess this will always stay as number 3 between these three. So I think Micron, AMD, Nebius makes sense, like the ranking as is.
I would just do like you mentioned, maybe switch it around, Neil. I would just put AMD, Micron, Nebius. The main thing is, I think at the end of the day, Micron, while it does have that strength in HBM, the memory will always be maybe a little bit more cyclicality. So I may be kind of like that risk a little bit. I'm maybe is pricing Micron for me lower than AMD. But overall, I can definitely see the bullish sentiment for all three. In forms of position sizing, I think I do have a big AMD is the only one I own at the moment. But if I was to start now, AMD would be way bigger than Micron and Nebius as well on this list. So that's how I would go about it.
And by the way, well, we didn't talk about Llama 4 on this stream, but I do think, I think I bookmarked it because we did talk about it on another stream. And where are my bookmarks here? I had to zoom out quite a lot. Because apparently there is Llama 4, and then it came out in three different forms, just like a DBZ character. But apparently there is going to be also different reasoning models in the future, according to Zuck. So we've got two more models on the way. One is Llama 4 Reasoning 1, and we're going to have more news to share on that in the next month. The last one we're calling Llama 4 Behemoth. Okay, so maybe it's just different names from this post, because it is Behemoth, and then another two. So I guess like we said in the other stream, I guess they're also going to come out with these 0.5 models, the Pro models, more reasoning models in the meantime, to just keep the attention on Meta or Llama.
I was surprised, Neil, because I remember in the last earnings call, the Mark Zuckerberg did talk about the reasoning model, and I think Meta is the only one that hasn't released a reasoning model out right now. We have Grok reasoning, we have Gemini reasoning, we have OpenAI reasoning, we even have DeepSeek reasoning. And I don't follow any of the other open source. I don't know if Alibaba, I know they have their Quen or whatever it's called. I don't know if they have a reasoning, but I'm shocked that Llama hasn't released the reasoning model just yet. I don't know. Maybe either they're lagging behind or they're gonna release something pretty amazing. So that's the one I'm gonna be definitely keeping an eye on in the upcoming months.
I mean, he says like Llama 4 Behemoth, this thing is massive with more than 2 trillion parameters. I mean, that someone wrote that's not a model, that's a whole universe. I mean, I think that's basically that's where we're going. I mean, it probably was delayed, and maybe they really want to come out with something like amazing. We've talked about AI agents before. Like, imagine if they come out suddenly, boom, you know what? Poof, here's the model. Here are AI agents across WhatsApp and Instagram and maybe Messenger as well. Have fun.
Yeah, and I think that's the thing about Meta, right, Neil, is they have so many different people. They have billions of people on their platforms that they also have to be careful of how they release it. Again, most of these are open source, so it doesn't really integrate into their platforms just yet. But I think eventually we're going to see heavier integrations of this Llama into their AI, into their consumer solutions, and into the social platform. Neil, I like this question here from Digo. So Digo, why choose 100 stocks to dilute your returns when you hold 3 to 5 well-diversified modes to compound? I'm a little bit of in the maybe not complete middle here. I definitely don't think I'm not the style to have 100 stocks, right, Neil? I think at my early days, I've gone through a lot of phases through my investing career. I think when I first started, I was really kind of um, really focusing on just like 2 or 3 companies, and it did great when they did really good. And it kind of sucked really badly when they would do really, really bad. So that kind of transformed me. Maybe I should have a more diversified portfolio. And then eventually, I at one point I started looking at like 40 to 50 stocks. Eventually, I kind of came up with this reasoning with Digo, where it's like 40 to 50, that's way too much. I mean, you kind of might as well own a massive ETF. So from there, I've gone down, and now it's like I think that's the cool thing about investing. You have to find what works for you. And now I think maybe 3 to 5, as for me, is still too little. Maybe I'll be closer to like 5 to 10, or around 15. But now the more I learn, the more I focus into individual companies and just really focus on that player. I've become more custom of just having small number of stocks, but big holdings within them. But I think eventually you have to go and learn through investing, because experience is what transforms and helps you find the best investing style.
No, and plus, I mean, yeah, like you said, everyone has their own investment style, and to be honest, I see no reason why I shouldn't own more than 5 great businesses, right? There are definitely more than 3 to 5 great businesses out there. So if I like 5, 10, 15 great businesses, why wouldn't I buy it, right? I mean, to focus on 3 or 5, okay, for some that might make sense, but I think it also comes from these 3 or 4 ones have performed extremely well compared to the other 10. Okay, in hindsight, that's probably very true, but I see no reason why investor shouldn't have 10, 15 stocks in his portfolio. So even, I mean, yeah.
And one thing's like, for one can say they have like 25 positions, right, or 30 positions, and like your top 5 positions can make up 75% of your portfolio, right? So that's, you're already betting big on your 5 big holdings, 75, and the other 25% you feel like you want to maybe be just like a growth investor and buy like 25 micro caps. Does that mean you really do have about 20 or 5 or 30 stocks? I would say no. I think maybe it shows that you're really bullish on those 5 companies and you're willing to kind of test the waters with those other small positions. So it's a lot of great ways to kind of play the market, and just looking at value at the amount of stocks might not be the best indication. Probably have like your top holdings on how much they weigh to your overall portfolio.
Yeah, no, I agree. I saw something, but it disappeared, as always. Yeah, what do you think about the Broadcom $10 billion buyback that was announced late yesterday?
Yeah, to me, Neil, I think it's just I think we're going to see big tech do it, announce it pretty during the upcoming earnings as well, or before earnings. I think right now, big tech, especially those that are in the AI space and kind of like consumer space, are going to say these are great valuations for us, and to kind of make a point. We're going to see this very often. But overall, for Broadcom, definitely bullish. It gives kind of it gives us good indication to investors. But there's a lot of other companies, Neil, with way better balance sheets than Broadcom, and I think they're going to follow suit, and do the same thing. So I think this upcoming quarter, while the quarter ended already, I think during the earnings call we're going to hear that companies are increasing their buyback programs.
You think they are going to increase the buyback program or just accelerate the buybacks?
I think maybe a mixture of both. Neil, maybe if you were kind of coming into an end, or having kind of like already low money, you will increase your buyback program. And if you didn't have, and if you still had plenty of money, we're gonna, because usually in their 10Q report, even if it's not part of the quarter, they might say it on their notes within the 10Q report that within this time frame we purchased X amount of stocks. And if they do that, you're going to see it's going to be accelerated compared to like what their normal or average is, because typically they have kind of like an average they buy throughout quarters. But I think if they don't increase the buyback, it's probably because they already have a hefty buyback and they're just going to accelerate the purchasing earlier on.
Okay, fair enough. A bit like Uber. I think month and a half or so, they basically announced an accelerated, advanced buyback of 1 billion or 1.5 or something like that. Ariel here asks where his AMD share is. Well, luckily for me, I still have time until the end of the year. But if you want, I mean, it's cheaper for me to pay now than maybe to pay later. So this
I
is
was
a
going to
buy
say
now, pay
that.
later.
I was going to say that, Neil. If you want to, if you end up, I think you're going to be right here. But if in the worst case it doesn't hit that price target, I think buying now would still let you get it cheaper.
Yeah, and who knows? Maybe it will become even cheaper in the coming days. We never know. We never know. But I mean, this is something I wanted to say when we touched on AMD at the start. AMD does have a bigger exposure percentage wise to China compared to an Nvidia. Especially, I mean, 2023 dropped, then 2024 it increased again, revenue from China. But when you look at the difference from embedded at the peak, embedded and gaming, let me just pull this one up, so it makes it even easier to show. Because I mean, Nvidia generates more billions, of course, from China, but percent of its overall revenue, it's much smaller than AMD, just because I mean North America for Nvidia is huge. For AMD, not that much. So let's see. So here it's $8.69 billion from the United States, $6.2 billion from China, including Hong Kong, and that's up from $3.4 billion in fiscal 2023. If we actually look at the 2022 one, that was 5.2. So in 2023, that went down, but then it reaccelerated in 2024. Of course, remains to be seen what happens in fiscal 2025. But I do expect that United States revenue does continue to go up faster, just because of the data center segment for AMD, which we can see right here, right back in 2023. I mean, it's quite crazy. Back in 2023, data center revenue was smaller than gaming and smaller than embedded, and today, combined, it still is much smaller than the data center revenue for AMD at the moment.
Yeah, I mean, for AMD, Neil, I think long term, this company is still good. I think in the short term, the market is just, hey, what can tariffs really do? And because I think AMD is still very focused, at least in somewhat the consumer space, but the data center with the CPUs, maybe the market is just worrying about them. So I know that revenue is from China, right, Neil? But I wonder, I can't see because of Ariel's. Let me kind of hide the message real quick so I can see what the other ones are. I wonder if kind of Right. So these are kind of like the OEMs that buy kind of NVIDIA, AMD's CPUs to kind of finish in their product. But I wonder like how much Japan might buy it, but then they might ship it to China to finish the final product, or Singapore might buy it, Taiwan might buy it, and they might ship it to China to finish that final PC, to finish that final laptop, and that's where the tariffs will probably come and impact maybe the earnings per share. So I think that's what the market is kind of just fearing, and that's why I think we'll get a lot more clarity during earnings call. But overall, I mean, bullish in these companies from their data center CPU, from their consumer CPUs, and obviously we've kind of seen a little bit of strength on their GPU product for the consumer market as well.
Yeah, I mean, would it be possible to think if it's Japan, right? So Japan that buys from AMD, and then you say they ship it to China for a finished product. Why not just buy from China and finish it in Japan, just to circumvent the tariff situation here?
So if you do that right, I mean, the reason it would kind of finish in China is just because the labor is cheaper. So while you might kind of reduce your tariffs if you ship it to Japan and finish the product in Japan, you're most likely going to be increasing the cost of it. So it's like, which one is the better evil, or which one is the worst evil? And you can't also you have to ship wherever you also can't do illegal stuff like say, hey, I actually made it in China. You have to, I mean, in Japan. I think that's going to be a thing, but it's like, it's not just the tariffs anymore, right? It's like if you change it to a place that has lower tariffs, will the increase of labor cost be worth the cost, that platform, right?
Okay, no, fair enough. Victor asks, where is the rebound? Well, I guess I don't know. I see way more green today than red, so I guess I mean that's where I see the rebound, right? I see way more green across the board than in the last couple of days. So stocks wise, market wise, might be up 1%, 1.5%, or something like that. But coming back to the manufacturing thing you said, do you have a feeling that a couple of months ago we're all talking about smart factories, robots working in factories, making things faster and cheaper, and then suddenly it has completely been forgotten?
I think it has been forgotten by the market. And I think this might be, I wonder if this is a reason to maybe accelerate, why some companies might accelerate in things like the robotic space. There's always, for everything, there's cause and effect, right? And I think maybe one of the effects here is going to be more demand for maybe the robotics side of a lot of these mega players, because that could be another way to kind of see how to get cheaper labor or stuff like that.
Yeah, no, okay, fair enough. I mean, because if we look at factories today, compare that to 10, 15, 20 years ago, we can definitely say that they became way more efficient, way more productive. So 5, 10 years, 15 years from now, I would expect factories to be probably fully automated. So I guess we'll have less of an issue of labor shortage in the future.
I don't know. I mean, I think that's the thing that robotics wants to end up helping, right? Is any form of labor shortage. And I mean, obviously these robotic companies, they're saying that there's probably shortages in so many different industries, but obviously you're going to have the other effect where it's going to take jobs. And I feel like that's just like any technology, right? I mean, people always say it, but like the farming industry, when it became more industrialized, there were so many people that probably used to work in farms that were picking up stuff and stuff like that were replaced. The horses were replaced by kind of like cars. And I'm not here to, there has to be some way to do it where it just doesn't end the worker gig space. But it's also, one can't, I think, deter technology at the same time. I think there has to be balance between it.
Yeah, no,
and that balance is I don't know how to put that balance. That's a whole way above my pay grade, but I think there has to be some form of balance.
No, I agree. I think we spoke about that in other streams, right? About maybe a quota of AI robots versus humans, real humans working in a certain business. I mean, It would, I guess, it would make sense. Although to think about it right now is quite strange.
And Neil, we get this question probably a lot. Did I miss something? I thought chips get exempt from the tariffs. So first, they just get exempt from the reciprocal tariffs. They still get included in the 10% tariffs. The other thing, Neil, is I do feel like usually maybe most administrations are only willing to work with countries. I feel like I don't know. Maybe this administration is also a little bit more business, where they're willing to work with individual companies as well. So maybe they could work with like a TSMC individually outside of having the Taiwan players as well. But I could see that's another thing that's kind of uncertainty with these tariffs reports. Is like, can an individual company say they're going to invest so much money in TSM in the United States that it creates kind of like the golden green card that they've been talking about, kind of for like tariffs. And there we go, the market turning less green and less green as we are talking here, Neil. But in forms of chips, Joey, the finished products, especially coming here to the United States, is never just a chip. No one ever just ends up buying a chip. Most consumers end up buying a laptop, right? So what ends up happening is the chip goes to somewhere in another parts of the world, usually kind of China, Taiwan, Thailand, where it's cheaper to build a laptop. And you build that laptop. Right now, that chip inside that laptop is no longer a chip. Now it's considered a laptop. So now the laptop itself is actually tariffed as normal. So when you send it over here, you're going to say, hey, look, this is a laptop. Even if it has semiconductor products within there, it will still be tariffed with the regular stuff. So it's kind of that indirect way that is going to be impacting the semiconductor industry. Now, the great thing is there could be a way that you can say if 20% of something is built in the United States, you can kind of write off that tax, that tariffs portion, and only kind of focus on the other portions. And if we see maybe more chips being built in the United States, and I think this actually could be bullish for Intel, Neil. I think this is going to accelerate customers going into the door of Intel, especially if their 18A is really strong. I think this could actually be a strong win for them, or at least for customers to enter the door, where if 20% gets built of the components get built in the United States, then you can kind of write that off a little bit. So a lot of just different questions happening here with tariffs. And I think that, again, that uncertainty is what creates a lot of this volatility today.
Yeah, no, I agree. And I mean, to be honest, the message could not have been handled worse since last week. Because since then, every single day, I have a feeling we get more and more information, and sometimes it's contradicting information, or it's information where I'm like, okay, good to know. Should have been said on April 2nd, not on April 4th or 5th or 6th or 7th. So yeah, could definitely have been handled better. I do want to quickly just touch on this, talking about the VIX when looking to buy stocks or buy back into the market or something like that. To be honest, I don't think I'm looking at the VIX. I'm looking at companies. Like the VIX, yes, it's been at 50 or 40 or something like that. I did talk a little bit about the VIX in the last couple of videos just to show you a couple of data points. But when I'm looking to buy certain businesses, certain companies, I don't look at the volatility index, because the volatility index tells you literally zero about a specific business. It tells you what the market is currently experiencing. But if me or Jose wants to buy Google or Uber or Nvidia, what does the VIX tell us about those businesses? Nothing.
And yeah, and for Neil, for like days, I agree. I mean, I don't really follow this, and I know there's been a few people here that have been mentioning that don't buy and why provide this hope in the market. I I think you've done it really well in your past videos, Neil, where you kind of showed like the long-term returns during massive down days, and I think that's just a great data point that shows that even if you don't time the market and if you kind of just buy during downturn dips, you end up being a winner in the long term of things. And I think most of us, Neil, right, are looking for that long-term investment where we don't need the money anytime soon. I think someone mentioned they had like a few hundred or thousand shares of like semiconductor ETFs, Nvidia, and big companies. And he's like, I am looking at 5-7 years. I'm gonna say it's very, very likely that that portfolio, if you don't touch it for 5-7 years, is going to be pretty big in the future. And I also don't want to say that I'm the type of person that throws all my money at once, Neil. I kind of have like a little plan, and it all depends on, I guess, your overall portfolio sizing. So I'm gonna just put random numbers. Let's say if the Nasdaq drops 10% from its peak, I usually throw, let's say, about $10,000. Then if it drops 20%, then I throw 20,000. Then if it drops 30%, I throw 30,000, and so on. 40% it drops I throw 40,000 into the portfolio. So I'm not the type of person that would throw all the money at once. And this is kind of like I've talked about it in the past that I have like almost untouchable cash account that it only gets touched during these kind of crazy red days. If not, I'm gonna act like that money is never there. But regardless, I'm still just a dollar cost averager on a weekly basis. And right now, another thing that I am doing is just finding ways to throw more money on a weekly basis, because I believe that money is going to grow dramatically over the next few years.
Yeah, and I mean, just to follow up here, because we got this comment here, guys, stop with the long-term stuff. You are correct. Well, thank you. Hopefully we are correct, but this can go either way. Who needs to catch the bottom? I just want the middle 80%. You're right. We are not trying to catch the bottom. That's the whole point, right? We are not trying to catch the bottom. We are buying when we see good prices. We are buying when we see companies trading at good prices. Now, like we said, we don't know. We don't know when the bottom is going to be. We are buying. It can go lower, which is exactly what has been happening in the last couple of weeks. If we have cash, we will adapt and we will pick up shares here and there. If not, we wait. I'm sure. I mean, I ran out of cash the last couple of days. I have to wait a couple of weeks to get cash back into the portfolio. I'm fine. If we continue to stay flat or go lower, that means a month from now I can buy more. If we can go up, that means my portfolio goes up, and just a percent of the cash in my portfolio will just be increased, and that's about it.
And Neil, I mean, another thing is like I always hear kind of these talks of like people that bought like Microsoft or something, kind of like certain year they bought at the top, they didn't make money in the long term of things or until like X years later. And if you can, there's so much reports that you can kind of do. It's like, yeah, the people that only bought at the top and never bought again probably took multiple years to make that money. But if you kind of look at that dollar cost averaging mindset on a lot of these companies, and if you stay in the market and you keep buying during these downturns, they are the ones that made their money back into the portfolio a lot faster than those that only bought at the peak. So it's like, I think you can, with any data point, you can make it always seem bearish or kind of it's evil to invest at the point. But yeah, I don't know where I was going with that, but I don't know how this became a therapy session. I don't know how we're still some green. I still see some green. Let's be happy.
So, Jose, how was your morning today? But no, yeah, I mean, this is basically, I think, where we're both going, right? At the end of the day, you will end up with more shares. At the end of the day, you will end up with more shares, and you had to spend less money to buy a certain amount of shares.
Thomas has this really good question. So lump sum versus DCA, or DCA versus lump sum. What's your approach? I believe lump sum, say, may return the best. Yeah, so it's also important, Thomas, that I think these returns are usually based on just the overall market, on just like a ETF or S&P 500 or index investing. In that term, it is, I think the lump sum wins every time, but it's not the same, I want to say, for our companies. And I think emotion also plays a big way. I think sometimes the most data proven point might still not be the best point for you. Because let's say I had, let's just say $10,000, and only I had $10,000, and I put it all at once, and then I saw that portfolio market crash. I know future me would be happy, but current me would not be. So how will your emotions react to that? And because you fully invested at once, will your emotions force you to sell and create some dumb mistakes? And then you actually end up making less money in the long term of things. So I think, Thomas, for every investor, it's different. just because it might be the most efficient point, it doesn't mean it's going to be the most efficient for you, because you are an extreme variable in that equation, and your emotions is it. But like here we can see exactly. So lump sum is better as if you can control your emotions, and I don't think a lot of people can control their emotions, especially if they throw a heavy amount.
Correct. I mean, correct. I agree. Correct can be incorrect for some, can be correct for the others, but I agree. There was a question here, I think, for you about Serve Robotics. I don't know if you looked at it more recently. Probably this one got hit as well. You know what's crazy? If I yesterday I looked at some quantum stocks, and I was sure these things would have been obliterated, but no, no, not at all. Rigetti Computing is actually up 2.8% in the last month. It's insane, insane.
Yeah, I agree, Neil. I think I mean I don't know. I I still think about, I forget who it is, D-Wave CEO. He looks so angry at the Nvidia's Quantum Day, um, and I don't know. It to me, it certain CEOs, in my opinion, were pretty grateful to have that kind of standing there. Um, but yeah, certain CEOs I don't like when you get too emotional. And D-Wave CEO seems very emotional to me. That even if the business is really good, I don't like the guy.
Yeah, I mean, at the end of the day, we are also investing in people, so that's important. You know, some people might say, "Oh, Apple is down another 2.6%," but like we've been saying, the price that people were willing to pay for Apple was just nuts, right? Even today, trailing PE is still 30, and the forward one is 25.6% for a company that is expected to grow revenue 6.3% and EPS 10%. Compared to the likes of an Nvidia, for example, a Google and Amazon, even a Meta, it still is much more expensive. But of course, since they have quite a lot of exposure to China, it does make sense to see them red when, well, most of the others are green or flat, just like an Amazon's basically flat today, Alphabet flat, Meta flat as well.
I mean, that's, I think, one of the stocks, Neil, that we both kind of. I don't think it's going to do bad returns. I just prefer the other mags a lot better, and they have better opportunity. I think maybe one of the biggest things with Apple right now is obviously they've talked about it, of kind of moving, of kind of diversifying outside of China, and to other places. I forget the other place that they're hit, and now
India.
we seen them, India, and before that they were also kind of planning on moving somewhere else, but that other place also got hit with tariffs massively. So it's like almost like a net zero for them.
Probably
I think
Vietnam.
I think it was Vietnam, yeah. So I think the big thing for Apple, though, Neil, is like they do have massive customers, and for them, kind of moving that supply is going to be insane, right? I think the volume that Apple provides, even though right now the market loves Nvidia's AI chips, right? Nvidia's AI chips. If you look at volume wise of the number of products of chips moved, it's most likely Apple just moves a tremendous amount, just because of all the hardware that they make. So I think it might be a little bit harder for them to really adapt as quickly, to the changes they might need to make.
Yeah, I mean, like you said, it might just be just worth for them to just pay the tariff and not move everything. So, but then again, if they do manage to just produce more in India, and then India does reach an agreement with the United States, then, and same with Vietnam, I think that they'll be fine. And to be honest, at the end of the day, I am pretty sure that a deal will be made with China as well. But this one will just take longer, because the US does not want to be seen as weak, and China does not want to be seen as weak. So both of them will need to make big statements, and then they'll probably work something out behind closed doors. I mean, yesterday, you probably seen the post, right, from China's embassy in the United States, where they basically posted at real Donald Trump on X, and that's it. But they later deleted that. Probably the intern got fired or banned or expelled Poor guy.
Or worse.
Went painting with Jack Ma.
Neo, I kind of saw it, but I didn't know what it was. I'm like, why would they just post at real Donald Trump? Neil, there's this question I want to take. So Jonathan, Mr. Murphy, believes that quantum is a threat to NVIDIA's dominance, and that one of the things NVIDIA is trying to do is kind of like stop, like force people, kind of what's the blackball the quantum market, right? And I keep hearing this theory here. My biggest kind of counter argument to this is, if this is really the thing that's going to end NVIDIA has about $50 billion in cash. Market caps of a lot of these companies are less than $5 billion. If they're really the next big thing and NVIDIA's care about them, why wouldn't they just use that cash to kind of buy one or two companies? There's a lot of companies out there that it wouldn't make this kind of like a monopoly thing. All the big tech players are kind of doing it. So if NVIDIA was so scared of quantum, why wouldn't they just buy one or two of these companies that are in this way? So I think that's the easiest kind of counter argument to the fear of quantum for AI. But I think Benjamin kind of mentioned it really well, where quantum is only able to solve a few problems on its own. But the big thing is kind of that combination with AI and supercomputers.
Yeah, I mean, and plus NVIDIA, they did announce something with quantum, right? CUDA-Q or something like that, I believe it's called. So whenever quantum will become a thing, NVIDIA will definitely benefit from that as well. Quick announcement here. Apparently, Trump directed team to have tailor-made trade deals with every country. So if it's tailor-made deals with every country, you should definitely expect this to take much longer than expected. And I mean, they've also indicated that it's not only going to be talks about tariffs and stuff like that. It's probably going to be talks about potential other partnerships, announcements, something that they haven't really worked together with certain countries before, various industry, maybe military-wise, AI-wise, factory manufacturing, shipbuilding, you name it. So it's really going to be new partnerships, new deals with each and every company, with each and every country, and things that we probably haven't seen before, with the likes maybe of Japan, South Korea, Vietnam, etc., etc.
Neil, we only got, I think, like a few minutes, so I know someone asked about Serve Robotics. I still follow Serve Robotics. I'm not super bullish. This would be like if I had a space for maybe like a 1% multi-growth potential. Serve Robotics could fall in that space. It's one of those kind of hit or miss. It's kind of like a little gamble with some technology that might work, that works already, but the market is still unproven. At moments like this, Neil, that's not where I focus. I focus in kind of like my big investments and increase my big players. So right now, I don't really like to look at the speculative market. I tend to look more at just my core positions. And someone asked winners of robotics. There's Symbiotic. There's a few kind of robotics that kind of work in the manufacturing and kind of the industrial space. I think those could be some winners. I forget a lot of the names. Maybe join us Thursday, and I'll probably bring some of those up.
Yeah, no, I agree. I just checked Serve Robotics, and we're still up 100% since the NVIDIA announcement last year, back in June. But we are down over 60% year to date, and I think 20-30% since a month ago. So that one did come down. And I mean, can we make a bold prediction here that we think Serve Robotics will be acquired in the next 2 years, 3 years, maybe?
I think it's possible, definitely. Neil, by who, that's a whole different question. But I think as technology evolves, and even if they improve somehow their manufacturing capabilities, I think that becomes just a asset buying point for other companies.
I mean, it could be, since I think, right, Uber and NVIDIA are maybe NVIDIA don't hold shares anymore, but maybe somehow they're still investors. So maybe just Uber is a partner, strategic partner and investor in them. So it's now at $200-300 million. Might be on the table for an Uber, although maybe they rather stay in the just partner stage at the moment.
Yeah, so like I mentioned, I mean, those definitely have growth opportunities. In the robotic space, Joey did mention that Symbiotics does have more reliant on Walmart. I think they bought a portion of Walmart's robotic asset or their automation asset, but it's definitely one that I think can benefit and have some. I think the industrial space is probably where robotics is going to see the biggest growth. Maybe not too much in the consumer at the moment.
Yep. I mean, we are going to, I mean, we're at the end of our hour here, and it does seem like the market was much better when we started the stream. So maybe it's our fault. Maybe it's our fault, but I mean, Nvidia is still green. Nvidia is still green. So at least you have that win. Maybe when we will go offline, maybe suddenly the market might turn green yet again. But yeah, we'll see. We'll see what happens. Of course, compared to let's say 2020, right, when the market also crashed super violently, well, at least we don't have to go into lockdowns, right? So at least look at the bright side of things. Look at the bright side of things. You can still go outside, be with your friends and families. Plus, this too shall pass. Maybe not tomorrow, maybe not next week, maybe not next month, who knows? But 12 months from now, a year, 5 years, 10 years, I highly doubt that big companies, good companies are suddenly going to be disappearing.
Thank you for that, Neil. And I don't know, I don't know if you've seen the Office, Neil. There's one scene where it's like, never mind. I'll talk about it later. But it kind of reminded me of something.
You better remember, huh? Because otherwise I'll be like here later. I'm like, okay. But anyways, don't panic. If you don't like the market, just don't look at the market. Go outside. There are probably better things to do anyway. So thank you. Oh, actually, at Thursday, there's no, I mean, Thursday, I don't think I'll make the stream because I'll be flying. So we will have to reschedule that either maybe next Tuesday or maybe just another day. We'll see. We will definitely let you know.
All right. Yeah, we'll talk about that after. So appreciate the support, guys. And see you when we see you.